Hi, this is Shane with The Rational Trader, and it is July 14th, and we're back from vacation, and we're going to talk about scaling out. So starting with more than one contract and scaling out, but then also auto adding, and how did the testing go? And then we're going to talk about volume profile and some of its characteristics. All right. So in fact, those of you that were here earlier may have seen there's a test running in the background. We'll go over this in just a minute. I didn't load that, so let's get that up. So in terms of scaling out, what we wanted to do was make sure that the system, particularly the system that does the adding, would continue to function correctly. If you decided to start with more than one contract and then scale out, and if you leave the net result of my testing and then running it live all week this week is that it works fine with the current system, the current settings, with one caveat. There's one exception where it doesn't quite work as you expect. So let's talk about what that is. I'm not going to chase down fixing it. It's not worth it to me, given the other things I want to do right now. So just need to be aware of it. So let's say, do I have a trade here? Let's go back. All right, so this is a good example. Let's say, we ended up getting long here, just a hint early. But let's say you went ahead and we're in here with a couple contracts, and you take one off like there. Okay, so you started with two. You got your initial thrust. You took one off. You're trailing, and then on this break you add. Okay, what we expect to happen is that the stop will move to break even correctly, and that the target will adjust to this new break even plus whatever we've specified, which is 80 ticks by default. That's what we expect to happen. All right. The move to break even works perfectly. There's no problems there. But this target move does not work correctly when you do your first add here. It stays wherever it was. So if the initial target was there, we're going to make this the initial target here. If the initial target was yellow, it doesn't adjust correctly up by 80 ticks. It just stays right there. Okay, and fixing that is not worth the effort to me to do it. All right. Curiously, if you then add again, it will correctly adjust. It's just that first time that it doesn't do it correctly. So just be aware of that if you're scaling in. The concept is we want to be just continually adjusting the target out if the market is going to be doing this on us. All right, that's the idea behind why we move the target. Okay, so we just want to continue to participate in that move as long as it keeps going. We don't want to artificially stop. But in this particular case, when you're scaling out, just the vagaries of the way the spreadsheet study works, that the first add after you've scaled out doesn't adjust. The next one will, for reasons that I don't want to go into. This is the way the spreadsheet study works. Okay, so that's what's going on there. I tested scaling out this week just to make sure it works live. It does. It works fine. The next thing to do in terms of kind of the current model with starting with multiple contracts is to start altering the trail amount. All right. So when you exit early, or when you take something off early, that's profit that's in your hands now. You can use that profit to help deal with other losses that you get during the day. And so we saw that a couple times this week where I end up scratching on the day instead of taking a loss because I scaled out and had some profit to use to fund other trades. Or you can use that profit in the current trade, which means instead of trailing by 20, you can trail by, say, 30. And now if you get to 20 and you still get stopped and you still get stopped out, you won't lose money. You won't have made that 100, but that 20 ticks. You'll have given some of it back. So that's really sort of the next thing to do. I need to run the replay tests to see how they work out. When we're trading a single contract, it's the data is pretty clear that the 20 tick trail is better than 30 because the reality is we don't get this kind of move here enough to warrant giving back profit on the times when it doesn't happen. But we do see it we see it enough that it keeps coming up, right? Where the market will be getting stopped out like right there just before the market turns. And so one way to deal with that is, okay, go ahead and start with multiple contracts, take one off, and then instead of trailing by 20, trail by 30. That allows you to not take a loss when you're trailing by a larger amount. So I need to start running those tests just to see, because we have the data. We don't need to guess. We can run a test across a statistically significant number of days and get an answer that helps us understand what to do. Okay. So the basic message is you can scale out just fine. The first target on an ad won't get adjusted correctly. It's not a huge issue that I've seen. And if you do ad again, it does then correctly adjust out. And my to-do list is to do some testing here on different trail methods using scaling out to see kind of what's optimal. All right. Now, those of you that were logged in earlier, so you can see there's a test running here. Where are we? Oh, we can just pause this now. All right. So the other thing that we've been doing on a larger perspective is we want to start adding another view of the market into the machine learning decision-making process. And there's a bunch of different ways to do that, and I don't know which one's optimal. But what I've been doing is I've added volume profile. Let me get this on the screen here. Volume profile. And what you see on screen, actually, if you're not familiar with this, we'll just very quickly go over it. Each one of these bars represents the amount of volume that's traded at that price level. All right, so conceptually, prices that have traded a lot, there's a lot of interest to trade there. But for a small account trader, they're not necessarily the best place to enter because you're much more likely to spend a lot of time there. Okay, this is the other way to look at it. I've spent a lot of time at this price level. This is what market profile talks about, is the amount of time you spent at that price level. So conceptually similar. This is the amount of volume traded at each of these price levels. This pink line is what's called the point of control, or the price level where the most trading occurred. All right, so typically as a small account trader, you want to stay away from these places where a lot of trading has occurred. Now, we've been working on a sort of a similar issue in that the chop avoidance that we've implemented is conceptually similar in that it's the market's going sideways here. Stay away from trading. Okay, this is on a much smaller time frame, and really what's going on here is this chop avoidance is mostly intended to help you deal with this case, the case where the market's made a strong move and now it's going to chop sideways. All right, the market's going to do this now. All right, and the methods that we've used in the past are too laggy. All right, they take too long to catch up to the fact that you're now going sideways. And so this chop avoidance method is more about recognizing that you're in this local zone where the market is thrashing about, and it's generally speaking it's after the market's made a move. So okay, we were either in that move and now we're out, or we're in the move and our stop is sitting below here, or we missed it. In all cases, we don't want to do anything in this chop zone. All right, we want to stay out of it, and so that's what the chop avoidance is about. If you take that concept of I'm going sideways here, you can sort of apply it to the volume profile. You can see where the market has spent a lot of time, right? By looking at the profile, you can see this obviously the point of control right there, a few ticks down, a few more ticks down. Right here, there's a spike. This is a place, this zone here. I don't really want to do anything here as a small account trader, or that's a target area would be the other thing to think about. All right, so if you think about it, the first concept here is where there's been a lot of trading, I don't want to enter there. Okay, so that's sort of point number one. All right, there's a couple other lines on here. All right, there's this line right here. Well, let's do this. Let's talk about why this area is a light gray. This area is a light gray, but the middle is a dark gray. Okay, and what this is again, we're using this. If you flip this on its side, this looks like a bell curve. All right, so the dark gray area is where 70% of the trading occurred. It's called the value area. Okay, that's the term we use in trading. It corresponds to what is that? Is that 3 sigma? And so another concept is, all right, in terms of the value area, this is where we call it that because if most of the trading occurred between these 2 points, it means that there are sellers that are willing to sell here and buyers that are willing to buy here. So each side is finding value. All right. As day traders, we're interested in. I'm not trying to get the best price for the day because I'm in a long-term position. I'm trying to get today's move. All right. So when we're inside the value area, it's more you're more likely to just chop around sideways and get whacked on your stop when you're using tight stops than if you're trading outside of the value area. Okay. So this point right here is called the value area high. And this point here is the value area low. Okay. And so, but this is for this profile here after all of this trading has occurred. All right. So at this point in time, this is the value area high. But it wasn't always here. It changed over time as the market traded. And so this blue line actually is the value area high as the market traded. Okay, and this is the value area low as the market traded. So as this profile got built, as it traded, this is where the volume area high and low were. The volume area highs and lows were. Okay. And so one one concept that you can immediately employ is, as a day trader, I won't take a trade anywhere inside the value area. I have to be outside of it. Okay, and so you can actually you can do that now. You could say in the spreadsheet, you could add the volume value area lines, and then say I won't take a trade unless I'm outside the value area, high or low. Okay, and what you'll find if you do that is that you you take less trades. First of all, you tend to be towards the edges of the trading ranges, and so as a trader that likes to trade reversion to the mean, that's exactly sort of what you want. Get away from this point here, this point of control, and then get a trade that is headed back towards it. That would be reversion to the mean. So, if the market trades, like right here, you see it trades outside the value area low. The reversion to the mean trade is to get in long here and then target that point of control. Okay. The other case is that we also saw this week where you break out of here, right? And instead of reverting to the mean, you just run. Okay. And so in either case, this is sort of the place to be looking for that trade. All right. What I'm doing is I'm not a volume profile expert. I understand that it represents the sort of the structure of the market. And what I'm doing several things right now in parallel. One is the testing we just described, which is, all right, only take trades outside the volume area and just use my normal behaviors I look for, and see how that works. All right, that's easy to do. The other is I'm curious about how the market behaves when it gets out of here, and what data traders use to identify if the market will revert to the mean or if it's going to run. All right, I'd like to understand what that data is and then give that to the machine. I haven't quite figured that out yet. All right. So I've been, chatting with other members who are more familiar with volume area and volume profile and market profile, and just kind of getting their take. And then deciding what to do. All right. And because we're using machine learning, we've got some choices here that you sort of don't have as a just a discretionary trader. I'm not interested in, what is the particular strategy that you use when you exit the value area? I just want to know what data you look at. And then I'll take that data and give it to the machine, and I'll have the machine tell me, here are the patterns that I find, that the machine finds in that data. So conceptually, from my personal bias, I like staying out of this value area and getting out towards the edge. That's the rational trader was originally what I originally did back in 2013, was mostly look for the extended move and then aim for the reversion back to the mean. And then also, just not to get too technical, but there's a bunch of different ways to apply machine learning to this idea, given the existing order flow model that I have. Right? I can just enhance that model by giving it more data, or I can create a separate model, and then the two work together to make a decision on what to do. So we can have a separate model that says this is in this zone do nothing, in this zone look for longs, in that zone look for shorts, and then use that as a way to decide what trades to take based upon what the order flow model is telling us to do. Okay, so I think that's where we're going to end up. And actually, I think there's going to be multiple layers of those. You're going to have sort of like today's structural model, and then this week's structural model, and those are all going to layer on top of each other to create a view of the market that the system then uses to make a decision on when to enter. Okay, so that's value area, and possibilities on what to do. There's another concept, which is we talked about how this price represents the price level where most of the trading has occurred, and in fact, all of these there's a lot of trading going on in here at these price levels. So the traders like these prices, right? If you think about it from the perspective that every trade has a buyer and a seller, these price levels are prices where sellers felt it was a good value, and buyers thought it was a good value. So they were able to get together there. But in terms of day trading, right, that's not what I'm interested in. I'm not looking for value. I'd be more interested in places where the market doesn't spend a lot of time, and when it gets there, it moves quickly away from it. Okay, so if we call this a high volume node or a high volume price level, high volume node is the more common term. I'd be interested in finding the low volume nodes and looking there for entries. All right, and so where am I here? This is VP. Let's go look at this here. You kind of ignore all the testing that you see there, and let me get to the volume profile. It's over here on the right. This yellow line here, we need to get to the profile for that. I went too fast. I lost it. All right, so here, this is for 6-8. This is the edge. This is the end of the day, right? And this is the profile that got built that day. So you can see it looks like this. There's a little spike in there, and then out here. All right, so that's there's almost like two profiles there. All right, so the market, if it started out down here, it broke higher and then went sideways. All right, if you look at, it's kind of hard to see it now because my system is covering it up. But if you look at this yellow line is a setting inside of Sierra Chart's volume profile study that says of all of the price levels in this area, this one has the lowest volume. So it's called a low volume node. The other one's right here. You'll also see a red line on top of it, which is something I've done. But so there's another one here. So of all of the prices in this area, this price level had the lowest volume. Okay, but that's for the profile as it exists here at the end of the day. This wasn't a low volume node all day long. We don't know what those were. You can't tell from the tools that are provided with Sierra Chart. You can only tell what is the low volume node at this point in time as the profile gets drawn. Okay, which doesn't help me because I want to look back in time and see, well, how did the market behave at the low volume nodes? Because my theory is that we don't spend a lot of time at low volume nodes, so these are good places to enter. We're gonna come up to a low volume node and we're gonna either bounce off of it or we're gonna blow through it, but we're not gonna spend a lot of time there, which is what I want. I want the places where I get in and then the market moves. Okay, so if we look at, I need to change this now there's too much on the screen here, causing us some confusion here. Okay, so let's do this. Let's stop the replay that's running. I'll just run this later. And take a look at what I've done related to low volume nodes. And so while we're waiting for that, let me look at what Philip says here. Developing value area high and value area versus yesterday's establishment. Okay, so Philip is pointing out that there's some relationship between the current developing value area high and yesterday's end of day value area high and low. Though I'd be curious to understand what you think that relationship means. All right, so if we look on screen now that it's done calculating, this is the, what is this now? This is yesterday, July 13th. And this is a sort of very traditional looking profile here. You know, there's a big curve here, a big zone, and then you've got edges, okay? And you'll see here at the end of the day that there was a low volume node here, this yellow line. So at the end of the day, this price level here was the price that had the least amount of trading sort of in this zone of prices, okay? And then, is that the only one? There's another one up here. Okay, so again, up here at the edge, there's a low volume node. So in this zone of prices, this is the one that had the lowest. This is this dashed yellow line. Okay, but what I want though is I want to know where were those yellow lines throughout the day. Because it doesn't do me any good to know that there's a low volume node here at the end of the day. I have to, if I'm making a decision to trade, I want to know where is it right then. So what I did is had the programmer create a custom study that tells me for every single bar where were the nearest low volume nodes at that point in time. Okay. And that's what is drawn on screen here. Let me get rid of. There's so much on screen here. Let me get rid of a bunch of stuff, and then we will look at that. So hold on a second here. All right. So here we have. Let's get rid of all this. Here we have the volume profile for yesterday. All right. And you can see the yellow line here and the yellow line here. All right. That's the volume. These are the low volume nodes at the end of the day. But you see these other lines as well. So let's go back to the beginning of the day. So here's 6:30 coming up here. Here's the open. All right. So now what we have is you really just ignore this dashed yellow line. In fact, we should remove that. I'm going to regret doing this because we're going to have to recalculate. But this is a very complex study, the volume by profile study. Okay, so now we're going to have to wait for that to recalc. Hang on. The recalculation is slow, not because of the Sierra chart volume by profile study, but because the custom, this one here, the TRT low volume nodes. So we have to build that. We have to build the volume profile ourselves in order to track it throughout the trading day. So let's give it a second here. All right. So now, what this shows is, if this is the starting time, the orange line is the low volume node, the nearest low volume node that was above the price. Okay? So at this bar, that was the nearest low volume node. In other words, pretty far away in this case. All right? And it stayed there. You know, it's still here, here, until actually price came up to it. All right? And you'll notice, this is why this is interesting to me. We came up to that low volume node and immediately bounced off of it. All right, now that node was set way back here. This is when we first see that that's a low volume node, back at 445. Okay, so that node was sitting there all this time. Not a lot of trading had occurred at that node. And as soon as we touched it, we bounced off of it. And in fact, we come up to it again and bounce off of it again. Okay, so it's this concept of, okay, low volume nodes look kind of interesting. That has me interested. Now, I'm also tracking, we don't have one yet. You'll notice that as price came up here, it kind of changed a little bit, right? You get this little orange dash up there, and now there's a red one right there. What's going on here is I'm actually tracking the low volume node for that bar, the nearest one that's above price and below price. Now there may not be one, but if there is, we'll get a red line down here. You'll see it later. Okay, and so what happens here is as soon as we actually, whoops, what did I do? I pushed the wrong button. As soon as price crossed that line, that became the low volume node below price, right? And then the nearest one above price is now up there. So that's why you see it jump like that. All right, and then again, the market closes below that level, and so now this price level is the lowest, the low volume node that's nearest to price, that is above price. There isn't one below. If we look below, there's no line down here. We'll see some later, I think. All right, so as the market's trading, what I see here is that, okay, these are good areas to be looking to enter the market because you're getting close to a low volume node. All right. Now what happens as the market trades, we run into a new low volume node gets created down here. All right, and here you'll notice that what happens is that low volume node gets created right there. Okay, and then we actually test it there, and we don't spend any time there. We blow right through it. So again, this is a place I want to be looking. I want the machine learning system to look at the order flow at these points and tell me what to do. All right, so find the patterns of order flow at these points and give me your prediction on whether or not we're going to bounce off of that or blast through it. Okay, that's the test you saw running earlier. If you logged in early, is the test I was running. So last night I created a model that is for all bars that are near a low volume node. And then today I'm running tests on that. And conceptually, this is what we're doing. Get near a low volume node and then make a prediction. Which way are we going to go? Okay, so Philip's asking, what time do you start building the profile? And I start building it as soon as the session opens the day before. So it's, 13:30, 1:30 my time, as soon as the electronic session opens. So it closes at 1:15 my time. So the cash session closes at 1 o'clock. The electronic session closes at 1:15, and then it opens back up at 1:30. So 1:30 I start building the profile. All right, so it builds all night, and then by the time we get in the morning, there's a reasonable chunk of volume there that you can use to make some decisions on. Okay. So now let's just keep walking through here. But this is the essence of what I'm describing here. Is if we can pay attention to the low volume nodes, then they just think it through logically. Price, there was not a lot of trading at these nodes. There's not a lot of people interested in buying and selling here. So it's a good place to make a decision on what to do. All right. Either bouncing off of it or blowing through it. So we can use the machine learning system to help us make that decision, right? Bounce off or blow through. We don't need to develop some strategy on what to do. The machine learning is going to do that for us. All right. And so I like this example here because it shows both cases. It shows bouncing off, and then it shows blowing through. And it's key here too, because you wouldn't look at this chart without these orange lines. You wouldn't look at this chart and go, okay, oh yeah, there's a low volume node right there. That makes a lot of sense. You don't know that. So by having that study, it helps us to see it, but then we have to have that study in order to provide the data to the machine learning system. Okay, so the low volume node in this zone, we come back up and you can see again, we come right back. This is really the same low volume node. It just hasn't changed at all. It's been low all of this time. For those of you that are really paying attention, you'll notice that the little bit of trading that occurred right in these two bars was enough to push that low volume node up one tick, and so now it's sitting here. Okay, now it's sitting there. It looks like it went away, but it didn't. My study is only tracking the nearest low volume node above price, and now the nearest low volume node above price is down here. I lost my cursor. Is down here. All right, but it's still sitting up there. And in fact, as soon as price gets above this new low volume node area down here, it starts drawing again. You can see. So again, I want to make a choice up here on what to do. For some reason I lost my. Oh, is that what's going on? It's trying to connect. I lost my. There we go.
Connection lost.
There we go. Okay, so now if we just keep looking, you can see we get a small bounce off of there, and then we come back to it. Here's a case where we start to go sideways. It's gonna become not a low volume node because you start going sideways, and you can see almost immediately, right? Nothing much happens here. You go sideways. It's no longer a low volume node because you're starting to build volume at this price level. So what we see then is, okay, now these are the low volume nodes. This is the low volume node that's below price, starting on this bar right here. This is the low volume node that's above price, starting back on this bar. All right. So now these are the places we'd be looking. And you can see as you come down to here, you set this low volume node. That's a place I want to make a decision. A question that I haven't answered yet is, how close do I need to be to that before I go, okay, give me a prediction? Do I need to touch it? Do I need to just get near it? And then if near it, how near it? The test I'm running right now is get within one bar of it, and we'll see. So that's what I'm doing right now. The test you saw running earlier. All right, so all of this in here is off the table if you're following this strategy, because you're too far away from anywhere. This is a place where you're building volume. We don't want to get in there as day traders. All right. And you can see this is the right place to be looking, right? Because the market goes up, and in fact, up here is the right place. Up here is the right place to be looking because look, you're close to that low volume node now. All right, but in the middle here, stay away. All right. Now this is just looking at the low volume nodes. It's not looking at the value area at all. Okay. So keep that in mind. All right. So again, we just continue to go sideways here, and what we want is we want to use these levels that the market has defined as the edges that we want to look at to get in. So again, here and here, I think you might be too far away if you're using 10 tags. All right, so give me a prediction here. All right. Some obvious things to do now. All right. So if you have questions, type them in. So some of you, this is very familiar. For others, this is a completely new concept. A couple things to think about now are there's a low volume node, but is it inside the value area or not? So it's possible, in fact it's likely, that they behave differently if you're inside the value area. Remember, so the value area is this area here where the market has spent the most of its time. Okay, but again, this is the volume area at the end of the day. We want the volume area at each point in time. Now, Sierra chart gives us that. I may have deleted it though. The volume nodes. I did. We need to add it back in. So Sierra chart has a study that shows you the volume area high and low throughout the day. It's called the volume value area lines. We'll put it on in just a moment. And so you end up with, actually, I'm sorry, let's put it on right now. My mistake here. Analysis. Where did it go? Oh, it's in the other one. We'll have to add it by hand. Okay. This is the instance 2 of the Sierra chart, so it's keeping it away from the production. We want volume value area lines here, and then let's look at the settings here. Draw developing value lines, yes. Ticks 1. Time period days 7. Okay, and then let's change the subgraphs here. So let's ignore that, and let's make I had this blue earlier, so let's do the same. And then I had this like a pink color. Okay, so this is where was the value area during the day for each bar. And so now if you think about it, you can separate it into 3 sections. A low volume node above the value area, a low volume node in the value area, and a low volume node below the value area. Okay, and so an interesting area of research would be where I should have made that different. Sorry. An interesting area of research would be where volume value area lines. How different look at build models for low volume nodes inside the value area versus outside, or inside versus outside and above versus outside and below, and see so basically what you're looking for is how different does the order flow look. Is it distinct enough that you want separate models that you want to apply when this condition occurs? So while we wait for this to calculate, this is going to show us where is the value area for the day, and because of the custom study I've written, we can see, well, where are the low volume nodes for the day. So if we go back to our starting point, which is here, here-ish, we can see we started off sort of dead center in the middle of the value area, and there's a low volume node at kind of near the edge. All right, it still looks still in the middle to me. Here we crossed through the value area low, and now you've got a low volume node that's outside the value area. That strikes me as fairly significant. Okay, and then we come up to here, and you've got a low volume node at the value area high. That makes sense to me. I would expect there to be less volume there. And then as we continue here, here is a case where I'm dead center. Let me change that. I'm dead center in the middle of the value area, but I've got a low volume node. What do I do there? Do I want to do something there, or do I want to stay away from that, or do I just want to model it differently? Okay. So here I've poked above the volume, the value area, and I'm near a low volume node. This low volume node. This looks to me like a very interesting place, particularly for a reversion to the mean trade. Okay. Same thing here. I'm just barely poking above, and I'm near that. Okay. The definition of inside or outside the value area, has to be more formally defined. Does the entire bar have to be outside of it, or does it just have to be closing? That's something that is up to us. Okay, so again, you're outside the volume area, you're at a low volume node, and that's the peak right there, right? And then you fall all the way down, back outside again. There's no low volume nodes down here to help us. All right, and then we travel back into the middle with low volume nodes. So one of the things, since we're at the end of the day here, we can start asking some different questions here about these low volume nodes that are inside the value area. If we look at this here, like this is shown as a low volume node, okay? But remember, it's relative to that area. So it's, of the price levels in this area, this is the low volume node. This is the lowest volume node. But if you're inside the value area, is that significant? Because there's still a lot of volume there. That's a question, something to be thinking about. So if you just consider, say, this low volume node up here with this one down here, okay, the actual amount of volume is right there. It's from here to here, okay. The actual amount of volume here is a tiny fraction of that. Okay, so we're comparing these two volumes. All right, and so that's something to be thinking about. If I'm inside the value area, just because it's a low volume node doesn't mean it's really all that low. And sort of what represents, or is that a factor in the decision I want to make? If I'm outside the volume area, I'm basically assured that the low volume node truly is not a lot of volume, because by definition you're in the area where only 30% of the trading occurred. All right, but when you're inside the value area, it's a different story now. Okay. No questions. Okay, so now let's do this. One more thing here. It's we're just about out of time. So I think you can probably glean from this that I've been a little busy. I'm going to turn on this. Yes. Okay. And what this is going to do is show me all of the bars that are near a low volume node. Okay. And I used this to give only bars that are near the low volume node to the machine learning system to model. And you can use I'm using this now to identify only the bars that I'm interested in looking at to take a trade. Okay, and so you can see just throughout the day here. So just look. You can just look at that. It's only one day, but just look at that and ask yourself: are those the places where you'd want to be entering the market? All right. So it's these gray bars right here, 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 of all those that I've drawn so far, this is the only one that kind of looks ugly to me. All the others look like, yes, absolutely, that's what I want to do. Maybe not that one. That's a test. Okay. Or maybe this one's okay because it's also a test, but then it ends up not working out. Here, I'm in the middle of the value area, but that is there's a low volume node there. This one for sure I like. I'm outside the value area. And there's a low volume node just above me. I'm outside the value area again. This one here, that one, I'm not sure about that. I don't like that one too much. In fact, that almost looks like a coding error. It has to be within 10 ticks of a low volume node to color gray. So this one for sure. This one, I don't think that's within 10 ticks. So this area, okay, you know, here's a case where I'm inside the value area. It's 10:30 now, so it's towards, you know, a lot of trading's already occurred. The actual low volume node here it's this amount. And I don't know exactly what it looked like at that time, the amount of volume. But one of the things I'm thinking about is if I'm inside the value area, to take the low volume node, the actual volume in that node, and compare it to the point of control and see, is it really low or is it just, you know, the value area is bigger and I want to stay away. All right. So obvious test is low volume nodes outside the value area. That's brain dead easy to figure out. Okay, that's what I'd like to test and see how that works. How does that work? How often does this happen? I can look at this and go, you know, I would love to get in there or there, and here, and then this one I'm not outside the value area, so I'm going to miss that. Okay. Jagdish, you're new. I don't recognize that name. This is a in development, very much in development. So we're there's like an early adoption group that people are participating in as we work through this. So what I'm talking about today is completely new compared to what we're currently doing. We currently have a machine learning system that makes predictions that is based upon the order flow. And what we're trying to do now is we're just incrementally improving that over time. So there's a lot of data up on the website for you to look at. All right. Okay, so gang, this is where we're at. What I've done is I've built a model through the M contract, so through June 7th, using only data for the... It needs to stop trying to connect. Okay, so I've built a model that uses, and I've only given bars that are near a low volume node, and now I'm testing that. All right. I'm curious to see how that works. All right. Just we can't look at one day like this and go, oh yeah, that works, right? I mean, you guys all know that. We got to run that for a long period of time. Our challenge remains that the behavior of the market is really unusual and difficult right now. So these cases of just insane volatility can really skew things. All right, so I've been struggling to understand how best to evaluate something given the current craziness. So what I did was I'm going to build a model with data through this date, just because it's the end of the M contract. and then I'll run some my initial testing just on this period. That's not really enough time. That's about a month. Ultimately, we want something that is 2 or 3 months worth of time. Typically, 3 months is sort of a minimum for me. But I just the way it works out, I'm not sure how valid our previous baseline period is, given the current market conditions. So I'd rather kind of focus on how the market's behaving right now with less data and see, okay, I'll use this month of data to understand is there potential, yes or no, and if I get to something I like, then we'll figure out, okay, how do we go back and try to get a larger sample size to establish that it's valid or not. Do some questions here. Paul, I've been trading volume-based value for several years, and you find this interesting. Will the study with the gray bars and the dynamic value areas be shown on the daily webcast? It's running in parallel daily, Paul. So the chart on the left has this. This is what I'm currently doing. What I did this week was I didn't have this ready yet. What you're looking at right now. This was done literally one day ago. What I did this week is I had everything you see here, except the gray bars. I was testing just normal trading outside the value area. Okay. And next question. Okay, and then Philip. Okay, so that's it for today then. I will keep you posted on the results. We've switched our update frequency from every week to every other week. All right, so the next one will be what is today? Next one will be the 28th. If something, if I've got something that I need to talk about, though, we'll go ahead and do it that week. So just look for that. You'll get notified by the GoToWebinar if I schedule an extra one. Okay. There's a fair amount to do here, though, and there's a lot of sort of larger machine learning architecture things to think about in terms of using one model versus several, and if you're using several, how do you integrate them together? That's non-trivial. It's easiest to simply add to the existing model and see how that helps you. But the longer term target is still there in terms of I'd like to get to a point where I've got models that are right now. We have a model that's looking at the order flow right now. I'd like to get a model looking at this day, and a model looking at this week. Those kinds of things, and all sort of integrating together. So when people talk about multi-time frame analysis, it's kind of along those lines. I'd like to get. It's not necessarily multi-time frame so much as it is orthogonal. Looking at it from a different vector or a different perspective, and then combining them as a way to get sort of a higher quality decision. Okay? All right, so that's it for today. I will see you guys on Monday.